Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for January 28th, 2024. And are you guys ready for a big week of trading? I know I am. It's going to be a huge week. We have the Fed. We have the jobs report. We have earnings from many tech companies and then some. We have the quarterly refinance announcement from the Treasury. All of this is happening this week, and it is going to be busy. So if you guys are ready, let's go ahead and get started. But actually, before I do that, I just need to say, if you haven't tried out Forex Analytics, you want to be in a community of traders that is just like you, jump into our community. It's $1 for the next 10 days. Why not be in our community during this week and being in our chat rooms and being able to chat with myself and the rest of the staff and other traders all throughout the week in such a busy week? Or if you really want to take advantage of this week, check out the Trader Funding Program. You know, you can actually pass an assessment this week, or you're going to have a better chance of doing it this week of any week, because you have to take an assessment. But if you pass it, you can learn how to access large amounts of capital, 100,000, 250,000, $500,000, $1 million accounts. Plus, on top of that, you're inside of the Forex Analytics community talking to me and other people from our community. And if you pass the assessment and you're trading this capital, you can keep up to 90% of what you make and not take any of the risk. That's a huge benefit. So check out the Trader Funding Program. Okay, without further ado, we're going to go ahead and get into what's happening this week. So much happening this week. Like I said, it's the jobs report. You got non-farm payrolls. You've got the QRA this week. Earnings. You know, we got earnings from Microsoft, Google, AMD, UPS. That's just on Tuesday. On Wednesday, we have Qualcomm, ADP, MasterCard. Thursday, Apple, Amazon, Merck, Honeywell. And I just named a few. We're getting in the meat of earnings season right now with so much happening this week. There's going to be a massive amount of volatility. So make sure you all take advantage of it. Take advantage of it. Listen to this video. Jump in our community. Be with traders that are like-minded just like you. No better place to be than in Forex Analytics. So let's get into what's happening on Monday. And, I'm going to go over to the charts that I normally, go through here on the week ahead video. We're going to talk about Monday being, it's not a lot as far as data is coming out, but it is going to be corporate month end. And then we have, there's corporate month end, which is 2 days before month end. And corporate month end, many traders are expecting the dollar to be in demand. Now, I do want to go over to the dollar index really quick, and you're going to see me reference the dollar. Where is it? Oh, there it is. You're going to see me reference the dollar index throughout the course of this video, obviously. But first and foremost, you realize we're still in an inverted head and shoulder pattern, right? So between all the data that's coming out, the Fed, the quarterly announcement, the jobs report that comes out on Friday, plus you have ADP, you have JOLTS data, you have weekly unemployment claims. There's so much that can move the needle with the dollar. The way we have to be looking at it right now is while we're above 102.80, I've been saying 103, but 102.80 is pretty much the level. You have to just kind of face the dollar with a bullish bias. Now, a lot can happen between now and Friday, or Monday and Friday. So that's the one thing you got to keep in mind. There's so much happening, so much data. But just that pivot, 102.80, 102.70, that previous resistance, the neckline, that's going to be kind of your bull bear level for the dollar index. Start dipping below that, you got to start being more biased towards being a bearish or a dollar bear. While we're still above that 103, 102.80, 102.70, you got to tilt towards being a bullish, dollar trader. Biases, the way that the market is, you and your bias and the way the market's positioning themselves is, two totally different things. But notice how we're hovering right around this 200 DMA. This 200 DMA has us captured right now because the market is really waiting for cues. Because either one of two things I think is going to happen today. This week, we're going to be making our way back up towards 105. Or the flip side is we start to break down and you're going to start to see a sell-off in the dollar this week because, it's going to be looking like a failed breakout. So the great news is the dollar is really set to move one direction or the other. Now, I personally am more slanted towards being a dollar bull. That's because we remain above 103. But like I said, there's so much happening. Corporate month end should be dollar positive on the margin. Okay. Now, Monday night was, I do want to talk about this really quick because Monday night we have the Australian retail sales, but I'm more concerned about the Chinese data later on in the week that might move the needle with the Aussie dollar. But if you recall from last week, and I'm going to talk about this a little at the very end when I do the trade setup reviews, I was looking for the Aussie to rally towards 66.50 and looking for a reversal. Notice how the Aussie didn't quite make it up there. We didn't quite get to that 50 DMA, which comes in around 66.50. Now, what you might be, if you're an eagle eye, you might notice this, or unless you're a cheater and you're listening to the face shows every day. Just kidding. I say that because a lot of you listen to this and then you listen to myself and our other analysts. Then you listen to the Morning Edge, which is for Forex analytics traders only. You guys have probably seen I've been looking at the Aussie as a descending channel, and that descending channel is still holding. So many of you already know that. But for those of you that don't, and you're not watching our shows every day, notice how the Aussie is just kind of sitting in this descending channel. Now, it's a little scary if you're long Aussie dollars right now, because with all of this announced stimulus in China, and you've seen the rebound in Chinese stocks this week, the Aussie hasn't done a whole lot. So if you're long Aussie dollars based on being long China and long risk, because stocks keep going up, you keep buying the Aussie dollar. Good news in China, you buy the Aussie dollar, you look at your P&L and you say, I'm just not making money. That is scary if you're long Aussie dollar. So just think about that as we go through this week. Now, we do have Australian retail sales that come out, they are expected to come in a little weaker. Some analysts that I've been reading say that there might be some seasonal adjustment period weakness, but we'll see. Australian data coming out Monday night. Tuesday, Mexican GDP, first thing in the morning. Now, the dollar Mexican peso is going to show up on the setups, best trade setups this week. So make sure you stick around to the very end when I talk about all the best trade setups of this week. But I want to point out a couple of things. Do you guys see the 200 DMA? Let me just point it out for you. You see the 200 DMA right there? Do you see the 50 DMA? Yep. Do you see how we're trapped in between the two? Yeah, so with knowing that, just that's like half the battle right now, knowing that you're in a range. But keep your eye on the dollar Mexican peso this week. I think it's set to actually make a bit of a move. We do have U.S. consumer confidence. Jolt numbers come in on Tuesday. Tuesday night, like I was mentioning, we have Chinese services PMI. So with the services PMI data coming out, we have to, obviously I'll be keeping an eye on the Australian dollar, because that's going to give us more of a feeling on how the market is taking in this Chinese data that's coming out. But with the Chinese, services PMIs Tuesday, is that Tuesday night? Oh, you know what else we have on Tuesday night? And I almost missed this. And this is the thing about doing the week ahead videos. If I do miss some things, make sure you jump in the comments down below and let me know, because I'm not going to catch everything. I'm just not. We also have Australian CPI just before the Chinese services data. So obviously the Aussie is going to be really in focus here. And by the way, resistance is still 66.50 or 66.40. I still think that that's key resistance. And you can see the 50 DMA is right there. Now support is going to be right here at 65.30. Now just below that, just want to highlight something. If you're not looking at it, that's also the 618 retracement. So what that means is there is a lot of support between 66 and a quarter, or 65 and a quarter, and then 65 cents. That support zone is going to be pretty key. If you're bullish the Aussie dollar and we start to get it below 65 cents, I don't know if you want to be bullish anymore. Let's just put it that way. If you're trading the Aussie dollar, I'm just going to keep it very simple. Now we do have CPI data just before that, Chinese services PMI, and by the way, CPI quarter over quarter is supposed to come down as inflation is coming down globally. Year over year is supposed to come down too as well. So we'll just see how weak it is come Tuesday night or Wednesday morning if you live in Australia. All right, what else is happening throughout the course of this week? On Wednesday is going to be a big day. I shouldn't even taken myself off of the video, and I'm going to remove myself. Don't worry, you don't have to look at my mug the whole time. But on Wednesday morning, we're going to get the quarterly refinance announcement from the Treasury. That's happening at 8:30 a.m. Eastern, from what I understand. Now, that's a big piece of news because this is where the Treasury might fiddle around with, what the mixture between, bonds, notes, bills, and that mixture actually shifted in November, and then that like kickstarted a rally in equities. Most analysts are expecting that mixture not to change, but my colleague K-Man, he was talking about it on Friday. He made a great point. On Thursday, Janet Yellen was very upbeat, and because she's so upbeat, there's a risk that the Treasury could shift back over to the bond market, or allocate more towards the bond market versus notes, and that could really have an impact, more of a negative impact on markets. But that's something just to keep on the top of mind on Wednesday morning when the Treasury does make that announcement. Now, that's not the only thing happening on Wednesday. Wednesday's a very, very big day. We have month end. The market is expecting dollar selling. I was reading some analysis from what bank? Let me think about that for a second. Citibank had said outflows from Japanese equities going back to 2003, the biggest number that their quant models have seen. That's something that could obviously influence what's happening in the Nikkei, the yen. So just keep that in mind. We also have ADP, or private sector jobs data on Monday. I'm going to take us back over to yields really quick. We also have I want to take us over to yields. Excuse me. We have Canadian GDP, and then we have US ECI, or employment cost index, and then we have the FOMC, which I'll talk about here in a second. But let's start with the 10-year really quick. And one thing about 10-year yields, I'm going to show you if you haven't been looking at them, you'll notice that we are bear flagging it. That means it's more of a bear flag setup. That means yields should come down. Now, what would change my mind is if you see a breakout above the 38% retracement here, that would suggest that yields are going higher. Now, the reason why that's important is if you look at the 10-year, the 10-year is like hovering. It's just like the obvious inverse. The 10-year is just really hovering around that 200 DMA. And so whether we break down, and if we start breaking down, and you can see the 38% retracement right there, we start breaking below that, next thing you know, yields are going higher, dollar screaming higher. Flip side is right now we do have a bull flag pattern in the 10-year. That would obviously start to move if we start to see yields come under pressure this week. So obviously the 10-year is going to be in focus, especially throughout the QRA and the Fed, both happening on Wednesday. Let's talk a little bit about the Fed, and I'm gonna take us back to the dollar index really fast. And the reason why I'm going to take you to the dollar index is because I'm going to take you to the euro in just a few minutes. So regarding the Fed, the Fed is expected to remove some of the hiking verbiage that came out of the statement. I don't know if we're gonna get too much from the Fed this week. However, market expectations of aggressive rate cuts this year may be pared back by the Federal Reserve Chairman. So in other words, the Fed Chair Powell may use a little bit more hawkish commentary versus dovish commentary to help the market adjust the pace of rate cuts, they're expected in the year of 2024. Are we going to get a rate cut, in March? I personally, I don't think so, but could we and should we start seeing rate cuts later this year? I guess. But are we going to see 6? I don't think so. And I think the Fed is going to rein that in a little bit by being a little bit more hawkish. How's the Fed chair going to be hawkish? He's going to say the jobs market's great, because it is. And inflation's coming down, but they haven't reached their target, which they haven't. And even though that the trajectory of inflation is moving down and they should reach target, that doesn't mean they're going to. If you look at, how strong the economy is, how strong, sentiment is, and how strong energy costs are. I mean, to get inflation, sustainably below their target, I think they're going to need a little bit more work. And the Fed chair may come across with that message. And if he does, I'm not sure if the market's going to get it, because the market sure has ignored the Fed chair a lot over the course of the last several months. But, we're getting closer. So as we're getting closer to possible cuts, the what comes out of the Fed chair's mouth, his words are going to be a lot louder this meeting than they were last meeting. So just keep that in mind. Okay, so and that could obviously influence the dollar. And if the Fed comes in more hawkish, the dollar could stand to really rally. And that's why you have to be respectful of where we're at above the 102.70, 102.80 level. All right, Wednesday night, and we're not done this week because we still have jobs report, and we still have unemployment claims, and we have a lot of other stuff. And Wednesday night we're going to have China manufacturing PMI, which could, manufacturing PMIs, and it's a private manufacturing PMIs data, if I'm not mistaken. It's Caxton data that's coming out. And then on Thursday, we have Eurozone CPI. So if you look at the euro still is in that head and shoulder pattern. It's obviously the inverse of the dollar index, so keep that in mind. But notice how the euro is just kind of grinding lower, and we still have a target. Now it's below there, so let me just make sure I'm clear here as far as your downside target on the euro. You take that head and shoulder pattern, that should complete somewhere down around the 106.50 level. So we still have some distance to go in the euro to the downside till we complete that pattern. But obviously there's going to be some stops along the way if the euro continues to move lower. I think that, following the ECB, the euro has obviously traded a little bit lower, and it looks like we're going to grind. If you ask me, it looks like the euro is just kind of grinding lower against not only the dollar, but against a lot of different currencies. All right, so there's the euro. On Thursday, we have the Bank of England rate decision. Now, here's the thing about the cable. The cable's stuck in a range. You can see in that range. We talked about it last week. It's still in that range. Hasn't moved. If you've been on the daily shows, on our face shows, do you guys not know how to get there? Well, if you don't, let me show you. All right. If you just go to our website, you go to our website and you go to where it says webinars. There's 2 of them. One of them, the Flow Show. It's during European hours. Our host, Ryan Littlestone, and his co-host, K-Man, they will get you up to speed and ready for the European trading day. I'm sleeping during that time, personally, because I live in North America. I live in the United States. But if you're in European hours or in Asian hours, you should be listening to the Flow Show. Then we have the Face Show. That is the other free show where you're going to see myself and other teammates. Ryan will be there. K-Man's usually there. Greg will pop in. Steve will pop in and out. Stelios pops in and out. It's hosted by Dale Pinkert, and then he does interviews with some of the best minds in the financial industry. If you guys, want to go to our scheduled interviews that we have coming up, you can see everybody that's coming up, over the course of the next couple of weeks. Then you can go through and watch all of the videos of all the analysts that have been around. And then you can go to our YouTube page and just go through all the videos that we've been doing, or all the interviews that Dale Pinkert's been doing for the last several years. So for the last 7 years. So check it out. It's a great place to be, and it's free. All right, now going back into what's happening this week. If you were listening to the show, then you would probably know that we have a bit of a what we would call a pitchfork in sterling right now. And so we're following the lower end of that pitchfork. It's actually right here. Following the lower end of that pitchfork right now. That means that there's a little bit of a trend line that came in at the lows on Friday. Now, I don't know how good it's going to hold up this week based on how much U.S. news is coming out, how many things can move the dollar, and how many things could move the sterling coming to Thursday. So maybe the pound dollar is not really the vehicle that you should be looking at. Perhaps, you know, on Thursday you should look at the euro sterling, because euro sterling has broken lower. And if the Bank of England, who's expected to be, still have a kind of a hawkish tone. Remember, the votes is what really matters. The last vote was 2, 0, and 7, right? So if that vote changes on Thursday, that could be what moves the needle in the euro sterling. And I would be really cautious should we break 85 pence. 85 pence is pretty key, you know, right here. 85, we start breaking below that, and there's a lot of open air. That means the cable could really strongly move against the euro this week. So that's something that I think you should be keeping an eye on. Now, Friday, we have, and by the way, I forgot, after the Bank of England, we have unemployment claims, ISM manufacturing data. And one thing that you got to look at with the ISM data, you know, if you're following along via the calendar, one of the things that you have to look at the ISM data is just, you know, it's going to come in below 50. But the question is, will ISM drop below 47? And that's the thing that I think the market's going to be really, really queuing into. On Friday, we're going to get the jobs report. Now, we don't have Canadian jobs this week, so it's just going to be the jobs report. And most analysts are really going to be focused on the unemployment rate when you're talking about the jobs. You know, the market is expecting us to create. We're here in the U.S. We're expected to create about 170,000, 180,000 jobs, but it's what happens with the unemployment rate. You know, does it tick up too much? Because 3.7% for unemployment is what we had on. I'm sorry, I was going to get over to a dollar pair really quick. As far as unemployment goes, the markets, we did have 3.7% unemployment. We're supposed to tick up to 3.8%, but does unemployment tick up even further? You know, once you start getting that 4% unemployment, that's when the market's going to really take notice. But big jumps too also matter. You know, up 0.1% is what the market is expecting. It doesn't move any more than that, then we might get some volatility. All right, that's going to wrap us up for the week as far as data goes, but that doesn't mean that our analysis is done. So what I'm going to say at this point in time is, if you enjoy these week ahead videos and you think that they're very beneficial preparing you for this trading week, make sure you give our team a thumbs up. It's Saturday. I'm filming Saturday morning. Our team worked on editing, putting it out on newsletters, social media all throughout the course of the weekend, uploading to YouTube, making sure that everything's set there. If you guys enjoy getting these videos every week, give us a thumbs up. My team really, really appreciates that. And jump down in the comments below, you know, and if there's something that you are seeing that I'm not seeing, or maybe you agree or don't agree, jump in the comments down below and let us know. All right, I try to read through all of the comments every single week. All right, let's get back into the market. So one of the big markets we should probably be looking at is gold. Now, I'm gonna give you a little bit different spin on gold than what you've seen here the last couple weeks. Yes, it's been heavy. Yes, I think I've mentioned that it's been trading pretty heavy. One of the things about gold that we should be watching is this descending channel. We aren't able to get where you can see we're right at the 50 DMA, but we're not able to get above that 50 DMA or above channel resistance. So the risk here is if gold starts to break below 2,000, we could theoretically be trading back towards 1950. Now, that would coincide with a rally in the dollar, more than likely, and a rally in Treasury yields too. That means a sell-off in the bond market, generally speaking. Again, there's a lot of moving parts this week. So if you're watching gold, I would say that these are the two levels that you're watching. You're watching, right there and right there. 2000, 2035-ish, 2030. That's it. All right. Silver broke lower. We bounced, but we're still trading heavy. We're still trading heavy, and I do expect us to have an eventual breakdown. But as you can see here, whoops, didn't want to move that. As you can see with silver, it's still, not trading well. And if we're going to reject here, maybe we finally get down towards triangle support. Once we start breaking below 21, that's where my silver radar is going to go up, and I'm going to be looking for levels to be getting long. But right now, silver trades extremely weak. I talked about the bond market this week. 200 DMA for the 10-year is really important, and we're hovering around it. So just keep that in mind. Where is my 10-year? I thought I had it. Oh, there it is. Here's the 10-year bond market. We've already discussed that, but keep your eye on there. And then let's talk about the S&P, the NASDAQ, Russell 2000, and whatnot. So last week, and I'm not going to review it too much right at this point in time, but we were looking for a move above 4,900, right? I drew it out for you in that those black lines I was showing you last week. I'm expecting a move up here. We basically did it. I mean, we came really close, but as a lot of you know, I say this quite a bit. Close works with hand grenades and horseshoes and technical analysis. So, you got really close to the 161% extension, like within striking distance, and then, we're starting to roll over a little bit. Does that mean we can't get there? No, I think it's possible, but we got a real big divergent relative strength, and that's what I told you is going to weigh on the market. And I think that is going to continue to be the case. Now, notice the NASDAQ 100. We just hit a brand new high here. Here, let's actually do this. Do a little work here on the NASDAQ 100. Okay, we continue up in this, and let's get rid of that one here. We continue up in this ascending channel. Let's get rid of that, and let's move this really quick to right here. Okay, now we're in obviously breakout territory. You can see it from way back over here, but relative strength is now divergent. You see how the highs are lower here on relative strength as the highs are higher here in price. This divergent relative strength, that's something that, would probably prohibit me from stepping in and trying to buy it right now on this dip because of this divergent relative strength. But that doesn't mean we can't get a dip and hold the channel. You look at the Russell 2000, still acts like doggy doo-doo on a stick. The Dow continuing to rally as relative strength stays divergent. So another warning here, but the Dow is holding up pretty good. But we do have a lot of Dow components reporting earnings this week, so that could obviously influence those 30 stocks. I should talk a little bit about crypto because Bitcoin has slipped, and I am expecting a move towards the mid 35,000 level. Now, one of the things that you don't see here, but I'm going to draw it out for you right now, is that crypto basically bounced to the underside of this broken trend line. Now, this is Oanda. We have already rejected it. So let me just show you what it looks like on data that's actually moving right now. You see how we rallied back to the underside of that trend line. Now, what you'll also notice is Bitcoin's coming up to a 38% retracement around 42,500. We stay below that. I still think Bitcoin, is going to travel back down towards the mid 30,000 level. I think these are levels that if you are long, you may want to book some profits and start to look for cheaper prices in crypto. That's the way I'm viewing it, and I'm trying to buy crypto, lower at this point in time. One of the other things that I should mention before I move along into our trade setup from last week, let's talk a little bit about the Nikkei. Here it is. So, as we've seen, and let me do something really fast. Let's go over to a weekly chart on the Nikkei. Okay. So if you look at the Nikkei here, one of the things that the Nikkei is struggling with at this point in time is it's struggling, as we're reaching into highs. But there's been this big divergence between China and Japan, and China's markets are starting to stabilize a little bit, and that means that the Japanese markets may start to come under pressure. Now, one of the big things that stood out to me last week, and I actually tweeted about it, is that we see some massive divergence on this last leg up in the Nikkei. So the reason why I mention that is because if we see the Nikkei rollover, it might actually feed into some of the yen. And right now, the dollar yen is just kind of stationary around the 148 level. But if the Nikkei starts to roll over, it might start to give off some yen strength. It might give some yen strength, and then we're gonna have to change our focus. On these week ahead videos next week, we might be focused more on the yen pairs, but it's to be seen. I think you just need to watch the Nikkei around these levels. All right, let's talk about some of the best setups from last week. Now, remember, every week for the last couple months, I started a new format with this show where I give you my best setups of the week, and then the next week I'll talk about what had happened. All right, and you can always fast forward to this level, to this area at the end of the video if you want to catch, how things happen week to week. All right, so last week we discussed, and let me pull myself off of here. We discussed short Bitcoin below 40,000. But remember, I said I'm not comfortable shorting Bitcoin. I'm just looking to buy it down here when we get to 35,000. That hasn't changed. The one thing about Bitcoin is it broke below 40,000. We went as low as 38.5, and now we've obviously bounced back on Friday. We came roaring back a little bit, but I still think Bitcoin reaches for 34, 35,000. Now, do you call that a win? Well, it did break below 40,000, and it traded down 1,500, and then it obviously bounced back about 1,500. So I call it a wash. If you're trading around it, you probably made a little bit of money. Maybe you got squeezed out. Maybe you lost a little bit of money. But overall, as I mentioned on the last week's video, I'm more looking to play it on the long side on a dip to the mid 30,000 level. The next setup that I brought last week was the Aussie dollar. I was looking for a sell at 66.50. Unfortunately, we didn't reach all the way up there. The good news is that we didn't go straight down either, which gives us a chance this week. But I would say for right now, I am still looking for a move to 66.50. Whoops, here, let me grab this. I'm still looking for a move to 66.50 to sell Aussie dollars. All right. And so I just call it a wash because it didn't really do much of anything this week. And rallies were being sold. We rallied towards above 66 cents, and it was sold. We just didn't quite make it to 66.50. Now, the last setup was the S&P, and short the S&P above 4,900. So what did the S&P do this week? Well, it reached above 4,900 once, twice, and I was really looking for it to get all the way to the 161% extension. We haven't quite got there, but wouldn't write the S&P off just yet. So I still, meaning I wouldn't be surprised if we still reach for 49.20. And look, should we see it? I like to be a seller up there, right? And so I think I can call that a win because every move above 4,900 was sold, and then we closed below at 48.85. Now, my setups from this week are going to be a little different. I'm going to talk about, first of all, the dollar Mexican peso. I mentioned, I alluded to that a bit ago, but I'm looking for the dollar Mexican peso to finally break above 1740. And if we break above 1740, it should be a quick ride higher. And is there Mexican data that's going to move the market this week? I don't think so. I don't think that that manufacturing PMIs, business confidence, or the I think it was GDP was the other thing that was coming out in Mexico. Anyway, I don't think that data is going to really be moving the dollar Mexican peso. But if it does, hey, above 1740, that's where I'm looking to get long. I already have some long exposure. A little bit lower than where we're currently at, but that doesn't mean that I won't add to that exposure and look to really trade a breakout to the upside, because that's how I'm looking to play the dollar mex. Next setup, crude oil. Now, if you are in the Forex analytics community, you know that we have an active pattern in play right now of the of crude oil. We already have that in play, right? That was obviously 5% ago, but I still think that crude can rally further. You know why? Because we came out of this triangle, and now if we break, we close above the 200 DMA, but the next move is going to take us a lot higher, in my opinion. All right, so I'm expecting it to go to 81.40. Now, if you just take this high right here to the low, the 81.40 or 81.50 level is the 50% retracement. Okay, so that's ultimately where I'm looking for us to go. Now, I say ultimately, can we go higher than that? Sure, we can go higher than that. But over the course of the next couple of days or week or so, I think this close above the 200 DMA has now exposed us for a move back above 80. And guess what? Stocks aren't going to like that. Stocks don't want to see, well, the Fed definitely doesn't want to see energy prices continue to go up, because it's going to make their job even more difficult. Last but not least, the last setup for this week, and I'm not sure how you want to play it. You're going to have to figure that one out yourself. I think volatility moves above the 200 DMA this week. So with higher volatility, if the VIX does break above the 200 DMA, you can see how let me delete that, but let me draw this. Do you see how we rejected this 2 weeks ago? I think we break above that this week. And with higher volatility usually means lower stock market prices. So if you're looking for the S&P to move down, one of the indications that you might be looking for is higher volatility. I think higher volatility is going to be a given with everything that's happening this week. I think the risks are now tilted to the downside in stocks and upside in volatility. So guys, gals, I hope you really enjoyed this week's week ahead video. I enjoyed my time with you, and I'm thankful to all of you for spending your time with me. It's your weekend, it's your time. So the fact that you do that with me every week, it means a lot to me. So thank you so much. And if you like this video, thumbs up, subscribe to the channel, hit the bell icon so you don't miss any of our videos. You're the first one to get it before people, even in our Forex Analytics newsletter. You'd be the first one if you just click that little bell icon on YouTube. All right, guys and gals, have a great remainder of your weekend, and I'll see you Monday morning for the Face Show. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.